Okay, and so what we're going to do is do what we normally do at this point, which is to go through these stocks. And the first one we're going to go through is, or the first thing we're going to go through is the indexes, because that's kind of what we did. And as I was waiting for us to get together here, I went ahead and wrote up the comments for tomorrow. So these are tomorrow's comments already. I kind of got ahead of myself. But anyway, I was looking at the index both here and on the weekly. And, you know, the key thing that we've done at this point is we've actually broken, we hadn't really broken out, but we created another leg higher, right? And so there was well, I should take that back. There actually was a breakout on the daily. Remember, we got up here, we hesitated, and then we got the breakout yesterday. And we also got over the breakdown bar yesterday. Well, today was very positive in that it actually kind of legged on higher, right? Because you really want, if you're wanting to be long, you really don't want to see this thing just come right back and start testing this swing point high. Now the good thing is it's a big wide one, so you know the odds are decent that it would probably hold. But at the same time, you know, the more bullish case would be that this thing just legs on up and gets up here and tests the next high, and then maybe settles up here after it gets there. And so at this point, you know, usually when you look at the Fed, you know, a Fed announcement, if they think it's going to be positive, which they did, they run it up into it, in this case hesitated there, and then break it out yesterday right in front of it. The day after, you know, so the Fed comes and does its thing on this day. The day after is kind of the critical day. Is like, okay, I've slept on it now. Did I, you know, and usually what happens is all these big companies, the institutions, right, they get together and they meet. And they have a plan already that they're going to execute on the Fed, and then the next morning they reevaluate and they decide whether to continue on with what their plan was or if maybe they have to change it. And so the next day is a big day. And so tomorrow will be a big day. It's like, does this thing just leg on up? Are people willing to keep putting their money in it, right? On the assumption that they're going to get higher and higher prices. And that's where the demand case is, right? Versus whatever the supply is. And so as it comes into this area, it's like, will they keep buying it? And we'll see that tomorrow if that's the case. The big thing that's out there, technically, is a big ABCD structure. And it seems rather large, and it is, 180-point leg. Can it be done? Well, if you think about what could move that, right, it would be the China thing. You know, let's say that they do some sort of trade deal next week. I mean, that's part of what started this yesterday, or actually is what started this yesterday. It was the tweet about China. So if it looks like that's going to happen, or if Lord forbid something actually did happen, this thing could do 180 points pretty quick, right? 3054 probably wouldn't be out of the question. But if they don't, I'm not sure what takes it up there short of some spectacular earnings, which will be the following week. So next week's G20, the week after that, actually you got another week and a half, and then the earnings start coming out again, but people will start looking forward to earnings. If you look on the weekly chart, this thing has a huge ABCD structure, and the projection here is like crazy. Now it's consolidated, right? I mean, so you had this big leg up, right? Big consolidation now, or at least it's going on right now. And if it continues, right, that's not bad if that's what happens. But eventually, right, this thing projects even higher. So it would be a breakout on this swing point high if it happens, and probably on the daily as well. And so you get a multiple time frame breakout if this actually does break out on the daily and starts this leg up. So it's hard to be negative here, you know, as much as you might want to be. It's very hard to be negative. At the same time, I'm still in the camp, you know, that more than likely this thing's going to trade sideways for a while. And so we may get some sort of a nominal new high that just falls back, does the retest, regen, and fails. Or maybe we don't quite get to the highs. But, you know, the stronger case for the bulls actually is more consolidation, and more consolidation in the top half of this range would be the best thing. And so we'll see how it plays out. But to get to these big numbers, you got to do the first two things, which is A, continue tomorrow, and then B, either consolidate and then break out, or just continue on the breakout on the highs. And then after that, right, screen fills, there's nothing on the left-hand side anymore. So that's what that one looks like. If I look at the other, the NASDAQ, it doesn't look all that different. Let me get this a little bit smaller out of the way and pop up the other one. So let me see, where do I have these things? Right here. And then these are the stocks we'll look at next. But this one looks almost the same, right? Got another leg going. Weekly set the same way. So no real difference. And that's what you really want. The one that's the weakest, I don't have it in here, but of course is the Russell. So the Russell's got a lot more work to do than these guys. And the Russell's more of a reflection of the concerns of the economy, probably locally. But the Russell, you know, has had a pretty good run too. It just is a long way down compared to the others. All right, so let's take these one by one. I'll just start at the top as usual, and then we'll just go through them. So BF.B is a stock that we added today, I believe. So let's see what the cube looks like first. So it's yesterday. So it's yeah, it's not extended. It's in the XLP, which has been one of the stronger sectors. Everything looks pretty good on the cube. So it broke out, nice big breakout, right? And so these, you had 3 swing point highs over here. It broke them all on this bar, right? Nice big clean breakout, and then it just goes up and comes back, and now is doing the retest. And so here's where we jump it, right? The ideal is you jump it here, and you get some sort of a push back up. All this looks fine to me, and it looks like, what is today, Wednesday? Volume here is 7. And it's going to have less volume too. So you're going to get an under-over potential hammer reversal if it holds up as it looks today on the daily. Weekly, same sort of thing, right? Gets a nice big push up, and there it has, where's my screensaver thing? Put this up here. There it has the retest region as well, and it actually came into the other one as well, right? Came into both of them, which is actually even better. And it's trying to reverse it. Had decent volume on the spike up, and yeah, I mean this you know, the only thing this thing did, which is, you know, you got a big move, right? Percentage wise, that was 13%, which is big on the XLP stocks. And you came into one of the breakdown type bars, right? There was a series of them here. Came into his high, which was the biggest volume at that point, right? Some bigger volume later. And you pushed more volume there too, it looks like, right? So you did everything right on the way up, and now you just consolidate. It looks like you're getting ready to set up something to go to the upside. And just like we just talked about on the index, test the highs. This one looks really good. I don't see anything wrong with it. You see what the monthly looks like. And the monthly has the breakdown bar. So this one actually, this was the one that probably where the supply really came in, right, off the monthly. And so again, you hit it, you don't have as much volume, but that doesn't mean you can't eventually get over it. It just means you usually consolidate before you do, and that's kind of what it's doing. So it may take it a while, but it looks good. Looks like a good stock. Can't say anything bad about it, as much as I like to give you all a hard time for your picks. Now let's look at the next one, DBC. So this one is commodity ETF. DBC. So this, if I remember right, this is copper, aluminum, and nickel. I can't remember. Patrick, do you know what's in it? Okay, one of you might look it up if you want to, but I think it's those three. I'm pretty sure copper's in this one. And because I referred to this one actually this weekend, and I was talking about, you know, if the market, if the economy's so strong, then why is something like this doing as bad as it is, given what it is? And they if I remember right, they trade the futures on 3 metals, 3 base metals. And you would think base metals would be doing well if you got a lot of construction, expansion, all that kind of stuff going on, right? So you got a big breakdown, huge volume. You come back in to test it. The actual low, this one didn't print as a swing point low, but you've got the test on this one. Your swing point low looks like, if I could see that, 1559, yeah, it's right there on the bottom of this. So it's like right there. Oops, actually a little bit higher. And that would be the retest regen that had already retested fully once before, so you would expect it to get this high. So you would expect it to trade here if it gets up in there again. The real test now is this bar. And so if you can't get into it, right, and your trend is down already, you got to expect this thing's going to try and go back the other way, and then the big test will be right there. And so, you know, this is, you know, when I look at a stock and I look at, you know, where it is when it gets to a key point like now, or like the one we just looked at where it had came back on a retrace to a key point, that's the place that your back's against the wall, right? So if you want to short, this is the place you short. You short it, you see it test, and I don't know if it did the test already, but it looks like it is. 1512 and 1545. So you did the test last week. This week you got an inside bar. It looks like it's going to have a little bit more volume, but you haven't been able to get over it. And that's, you know, that's where you put your back against the wall. You don't have to give it a lot of room if you're wrong. Let's look at the weekly. It's also down. Swing point low. There's a high there. And see, this one also had the breakdown bar, and it got over it, right, and then came right back up underneath it. So kind of a range thing going on here. You're right at the bottom of the range. Yeah, and who knows? I mean, this could be a huge, you know, ABCD type structure to the downside, right? That's trying to develop. But your trends are down. They're not up. As a matter of fact, if we pull the cube up, you know, we'll see that, right? We'll see it's bearish. You can see it. You can see it on the charts, and the cube confirms it. And so, you know, if you want to stay with trend, right, our first thing is always try to go with the trend most of the time. Well, the trend's down, so you'd be looking at a short. Only bad thing here is if you do take the short, you got to put a short leash on it, right? Because if it gets over here, it's going to try to get up to these guys, right? It go to the next level. So you can't give it a lot of room if you're wrong. Unless you're trying to scale or whatever, right? If you're planning on an intermediate term time frame, then you're starting pretty early. You're really trying to trade this on the daily if you're trading it here short. Looks negative though, right? And the weekly, excuse me, the monthly is the same way. The monthly's got a big ABCD down, potentially trying to form. You got two swing point lows if it breaks. You know, this thing goes to the bottom if it breaks here. So this is going to be, you know, if it comes back down, breaks, then it's like, you know, ABCD down to the bottoms. So yeah, what? Oh, energy. Well, that's interesting. So it's not what I thought it was. This isn't the one I looked at. So this one has 47% energy, 15% precious metals, you said? Okay, so 15% industrial, yeah, 15% industrial, 12% precious, and then 50% energy, right? So energy is the big component here. And energy hasn't been having a good time, so that's probably most of what's happening here since it's the majority of this thing. So I guess that answers the question of why it's as weak as it is. Yeah, and here you're playing headlines, right? What happens in the Middle East and all that business, right, if you try to short here. But again, the setup is here. This is where you put your back against the wall and you say, you know, I don't think it's going to get over it if that's what you're trying to trade. If it does, you know, you got to think it comes up to this next level, and so you probably keep tight stops on it if that's the way you play it. All right, G. Yeah. Yeah, and so the comment is that looking at also the macro picture of what's happening with the Fed and what the Fed is doing, and the parlay is that you would see these things sell down. And that may be true, but you know how I work. I look at the charts. I try to forget most of the news, but you know, like you, I know what the news is as well, right? I just try not to. Honestly, when I look at the charts, I try to forget most of the news and just look at the charts, because most of the time, if I think too much, I kind of shoot myself in the foot on all these connections, especially anymore. I mean, maybe it's just me. I mean, I've traded a long time. And, you know, I studied economics way back in college and really liked it, and, you know, learned all the stuff about business and economics and all that junk. And the relationships that I saw back then, you know, that were fairly consistent. So many of those things are upside down. Y'all see me refer to upside down world. You know, to me, that's what I'm referring to when I say that, right? It's like so many relationships are just upside down anymore. I mean, I don't always see what I used to see, and it's hard to know. You know, for example, you know, take this as an example right now. Fed goes and says we're going to probably, you know, ease rates, and you know, it certainly looks like that's the thing they're trying to tell us. But then at the same time, the dollar's still strong. You know, how are you going to ease rates and the dollar's strong? Well, I know you can make the argument that, well, the other guys are already doing it. And yeah, I can understand that too. But just some of the relationships, they just, or dollar being strong and gold being strong at the same time. Some of these things just don't always make sense the way they play out. And I know short term, a lot of these things can do what they want. But, you know, my view is that so much of this stuff doesn't always jive anymore. Let's take the next one, G. G is Genpack. So Genpack is, let's see what this is, because I'm not familiar with it. XLY. And bullish across all time frames. Broke out yesterday. Got the extension today. It's going to have a breakout on the weekly as well, and it already broke out 3 months back, 2.5 months back. So, well, I mean, this is nice looking stock. You just, you know, the thing here is you don't, if I were trying to trade this now, I really wouldn't wait too long to trade it, because, and what I'm going to say here is that this is a huge wide price spread, you know, back whenever it happened. It was a negative bar, right? It's a dark bar. So you go way up and you can't hold price. You close down here. And then that just causes a lot of, you know, consolidation. And the fact that it consolidated and didn't actually reverse lower is positive. And then eventually it gets into the top half of it again, right? And now it's trying to leg out. You don't, you know, remember, after we come back within 6 bars, we usually test the bottom third, right? Which would be down here. I wouldn't expect that with this stock. You'll test into this stuff at most. Probably test the top third. And so this one is going to be an exception to the rule, right? I don't think this one will actually do what it should do if you just forget everything else. And so I wouldn't, you know, it's already tested back immediately today. I doubt it will get that deep. So this is one that you try to trade in this range up here, and it's positive. It's probably going to, you know, today is Wednesday. I'd probably watch it tomorrow, see if it's going to hold that breakout along with the rest of the market tomorrow. And if it does, I'd probably just buy it. I'd start legging into it. Hasbro, this is a toy maker. And these guys, I didn't expect this chart to look as nice as it does. So evidently they're doing something really right. I guess they're not importing their toys from Japan, if that's what they do. I mean, China. So they're not going to get hit with the tariffs, huh? Yeah, it's very positive. So what about this one? This one breaks out. Top is 105. and it doesn't test it. It's more than 6 bars now, and it's getting up to the tops of these. So this is 107.58. It's right at it. Yeah, so what I would try to do with something like this is I would sit here and work on a buy in this range right here. You got this big support right there, right? So anything into the top third is the buy point, and I suspect 106. Yeah, 103.67, which is just, yeah, but it's also right above this big, you know, this area here to me is kind of the, you know, you really shouldn't see, you should see money come back in there. That's why this green shows up. And so it should be a nice demand area right there. And so anything between here and there, yeah, so anything in between there is probably a good spot. And you also have this bar that's anchoring it as well. Yeah, and so yeah, I would sit there and just wait on it to come in there and pounce on it, because you're probably going to get a move up to test these highs. The fact that you've already had two nice big, I mean, what is this, 15 and 11? You've already had a nice big move. So you know, this is the kind of stock that, and we'll see this with the KTOS. I saw KTOS on the list, and we'll talk about it here in a minute. But this area up here, right, from about, you know, I'd take the bottom of that bar. This area up here, you would think you'd see consolidation take place up here, and the initial consolidation will take place here. Now, if this stock is stronger than we think, it will just leg on up. You don't know what it's going to do. And so what you do is you let it come back in, you get a good entry on it so that you're not underwater, right? And then you see, okay, can this thing leg up and take these things out? And if it can, great. If it can't, well, then you're just going to, you know, trade sideways, and maybe you take a little bit of it back off or something as you wait, and you play it back and forth. Yeah. Yep. Yeah, and so to relay it so everybody hears it is the idea was put 25% in here, 25, the rest of it down in here, and I would actually, if it comes in there and buy it and then bounces back up, which I think it will, whether it gets this deep or not, then you see what kind of volume it attacks these highs with, and if it can't get over them, you just take it off and do it again. You know, so remember the win-win case I've talked about before, and that is that, you know, take this high for example. If you go up and it hits that high and it's going to do a test failure, this is a weekly, it's going to, looks like it's going to do a test failure, you just flip it back out on the idea that you can just get back in. Or, and that's the best case, right? So you make that difference, and I don't know what that difference is, but it looks like it's, you know, a few points. Or, you know, if there's enough worth, you know, to mess with, or if you're wrong and it just goes up, odds are it will come back and retest regen, which is what we expect, and then you just buy it back where you sold it. And so you're kind of in a case where you're saying, okay, if it does what I think it's going to do because it's doing a test failure, then I'm going to be better off than to just sit there, right? Take it all the way back down, make nothing, and then I buy it again and we do it again. And so that's, to me, that's kind of the win-win shot. KTOS, this is the one I was just talking about. So I was talking about when you get these huge moves like this one did, right? And if I go over to monthly, that's a 38, almost 39% move that month. And so this leg up here was 39% basically from this area right down in here up to there. And so you get a huge move like that. Well, what are you going to do? Well, you're going to work it off for a while, right? You're going to consolidate. And you guys know, I've told you before that I actually own this one. And so what I've been doing is trading it, right? Come down into this, I want to buy it. Once it peaked out up here, it kind of looked like it was peaking out. Then I sold some. I think, in this bar here. And then I just wait. And right when he comes down, I buy more than I sold. Because the first buy is always the best buy. And then as it bounces back up, the top of this bar right there was about 22 something. And I just figured lower than that, right? I figured right in there, and I sold it all out at like 21.90 or something. And I just tried to buy it, but missed it here. So I missed the second one. And now I'm just kind of waiting. So I still have my core position. So you buy a core position, which we fortunately bought back here somewhere. You hold it, right? Runs up, and then you trade around it while it consolidates, because it takes a while. You're almost guaranteed, because this was related to earnings, I believe, back here. And matter of fact, it was this bar. You're almost guaranteed 3 months of good trading, right? Once you get earnings, you're going to get 2.5 months of good trading. So once you get a blowout like that, a big move, but after it makes its run, it doesn't know what the next earnings report's going to be. Is it going to be that good again? Is it going to blow the numbers away again? So they consolidate it. If they do, it'll do another leg up. If it doesn't, then you may get deeper retraces, right? As this thing builds a bigger range on a different time frame. So as far as the stock right now, there's not much you can do with it other than trade this range, because I think if you're trying to buy this on the hopes that this thing's just going to break out right now, that's a tough trade, because it's made such a move already. Is it if you're looking at a different time frame, maybe you can make the argument you start in, but if I'm looking even at the weekly time frame, I'm trying to buy into this overlap. So I'm trying to buy in here, and as close as I can down to the bottom of it. So about 1960 or so, I think it is 1980. So I'm trying to buy it down there on this time frame if I'm looking at it. It looks positive everywhere though. It's a good looking stock. So unless you have any questions, that's that one. MOH, this is another healthcare, Molina. And so this one did a breakout and now retest regen, and it looks like it failed. So let's look at this. 14581. Yeah. And so when it does a failure, even though it had a nice, big run up, it does a failure like this. It may leg on up there or not, who knows. But more than likely, what was up is probably sideways. So more than likely, you're going to see, even if this is going to work higher, you're probably going to see this thing work up and come back down and do a consolidation kind of thing on this time frame. And so that's the first thing to look at. The next one is, it looks like a bearish engulfing. 14355, 143, no, not quite, but almost. And swing point high. Yeah. So this was also a retest regen here that failed on both time frames, right? So again, in this case it was, had gone bullish, but it's probably sideways. So more than likely this thing is going to consolidate for a while. And yeah, so my guess is that this is kind of dead money until something else happens. So what I would do, something like this, if I'm really watching it, wanting to get into it, is I just let it consolidate. And if I do anything, I try to buy at the bottom of the consolidation. This looks like this was the range bar, never did form though. So most of the beef here is like in this price area right there, right? That's where almost everything is. And so if I'm trying to do something with this on the long side, I'm trying to buy down in the bottom of this consolidation area, and with the assumption I'm on a longer term time frame, which is positive, right? Because this had a nice big spike up, and now it's consolidating still. This is a hell of a run, right? 20 at 30. This is like 40 to 140. This is like a triple. So it could consolidate for a very long time. So you have to buy the bottom of the consolidation. If you're wrong, and if this thing really takes off, right, it will set up some swing point highs probably up in here. So this will set up as a swing point high at some point. And then you get a breakout on multiple time frames, and then you can trade it on the breakout. But until then, it's kind of hard to trade it with any kind of good probabilities. Okay, so that's that one. Let's see what the next one is. SON, son of a gun. Let's see. SON. So Sonico Products, this is probably a refinery, I think. And boy, they're strong, huh? Plastics? Paper and plastics, okay. Okay, paper and plastic containers. Swing point highs break, right? So breakout, breakout. Trying to retrace more than 6 bars, all of that's positive. So that area, just like that very first stock I think we looked at, as it comes back into these areas, especially right in there, is a nice spot. So around 64 if it gets there. And that may be a little deep, it may not get that deep. If we look over here, you had ABCDs up. These look like they're getting close to done, right? This guy here, it's not that far to go. And so you really want to get in at a good price here. You know, you don't want to jump the gun and try to buy it up here. You want to make it retrace. And this ABCD is almost done too. So I don't know if you're going to get a lot more juice out of this. I think it's going to have to set up something again. So I think a lot of the juice is already gone, just looking at it. So it's positive, yeah, it's fine, yeah, you can trade it. I just don't know if you can expect a huge run up after this. The best setup is here if it actually did it, right? Which would be a retrace back into here somewhere, and then you could run those points. The good thing about something like this is your probabilities are good, right? Probabilities are great. The bad thing is your reward to risk is probably not, you know, going to be great. I mean, it'd be okay, but you just don't have the huge upside probably. Just looking at the charts. TSCO, which is tractor supplier, it's like a kind of like a hardware store across the Midwest, especially. They have them all over the place. Yeah, retest regen comes in, does a full retest, which actually makes sense, I guess. Actually, it's kind of interesting because this one never really tried to regen. So this is really, you know how sometimes you guys have asked me, it's like, okay, is this the first test or a second? This is still the first test. So it actually traded lower than it should have. Well, actually, that's not true. It came back in immediately. So it actually traded as it should have. It did the full retest, right? And now got a nice spike up today. So nothing wrong here. A lot of swing point highs it came back into. Everything's okay there. So it just did what it was expected of it. ABCDs go up higher here. This swing point high was tested immediately and not tested again, so everything's fine there. And it looks fine here. It broke out 3 months ago. Yeah, this one looks fine. And the real buy was right in here as it tested and failed. That volume there a lot less, right? That was a good bar test, and then the next day was a good buy if you didn't get it the day before. Today, of course, now you have to pay the premium. When you find these things, you have to set them up and decide what that case is, right? And be ready for it. See if the test fails the way it's supposed to, and if it does, then you just buy it. So here's the dollar. Dollar pulls back today on the Fed news. This is an interesting, you know, this thing is bullish when you look at it, right? It's extremely bullish, actually, you know, longer term. You got an ABCD that projects up to new highs. This is on the monthly, right? And considering that we're talking about the dollar, right? This is 27 here, about 27.5 probably. If you look at it on the weekly, you got, you know, kind of stair-stepping ABCD, small ones, which makes sense in this currency thing. right, all the way up. They just do it over and over, all the way up. Just, you know what I mean? And it just never stops, right? Just keeps doing it. Now it's consolidating, right? And then you kind of got these little tests and then a big bar down with volume on it. So the real question now is this thing done what it's going to do, right? Is it going to start legging up again, or is it done? The long term says it can go farther. Consolidation right now doesn't really tell you here, but it's still positive. Trend is up. The only thing that tells you anything, and I've pointed this out before, is your bullish retest regions on the daily time frame have been failing, right? So you had one failed there. I think it was just the one. Yeah, it was just, no, this one failed also. These two, right? They got underneath these right here. And so, excuse me, not that one. On the way back up, it got back over them. So you had two bullish retest regions that failed, then you had two bearish retest regions that failed. And so a lot of chop, which reflects what we're seeing on the weekly, right? A lot of chop in this range. I wouldn't consider this, you know, bullish until it actually breaks out again. You know, in terms of a trade, is it positive? Yeah. I mean, if I had to buy or sell it, I would be buying it. I wouldn't be selling it. You know, if I had to make a trade on it, because the trends are up. But right now, it's just a lot of thrashing taking place, you know, in this range, and I'm guessing it's going to continue for a while. It doesn't look like it's going to stop quite yet, but eventually, you know, looks like it wants to go higher eventually, right? And I think I covered them all. What else? Anything else, or any comments or questions on those? Yeah, and so the comment is that, you know, the ideal here, if I go over here and pop it up to, I'll just go to the up here, I'll go to the major sectors. If we look at the major sectors, the ones that are really strong right now and continue to be strong, you know, the whole builders have been extremely strong, but they were a very weak chart to start with. So they've had a great run. I think they're up like the most of all the sectors. But the ones that are really strong is like real estate, and this is what Matt's pointing out, in what durables, and this one as well. I should probably get rid of this one, huh? I've got two real estates now that they actually created this, and yeah, but I used to have the IYR. So Matt's saying that these have a lot more stocks in them. I used to have this because this didn't exist. Now that they finally created it, right, and this is part of this genre, right, it's part of these guys, I'd rather stick with these, right, because these are the ones that get traded the most. But anyway, the point is that these three, durables, real estate, utilities, these things have been strong for a while and continue to be strong, which is kind of interesting. And it's not just here, guys. You know, I trade the Swiss market, as you know, for the professional guys. And if you look in the Swiss market's very different. They don't have sectors as much. You know, here we have sectors, right? The Swiss market has three big stocks, huge stocks: Roche, Nestle, and Novartis. Those three stocks are like just huge compared to everything else. And so if you're going to safety in Switzerland, you go buy these guys, right? And because they're so huge, their weighting in the index is huge. And so their index actually is one of the better performing indexes this year, because everybody wants to go to safety, just like you're seeing here this year. And so you see the same thing. And when I look at Japan, which I also trade for the professionals, same thing there. I see the safety stocks mostly. A little bit of electrical, but it has been strong lately. But before, it was a lot of the safety stuff. So everybody, I mean, when you think about it, I guess it makes sense. Everybody can't make any money anywhere else. They got to put their money at risk. How are you going to do that? Well, you try to get the safest at risk you can, or at least what you think is. And that seems to be what's happening. I'm going to stop this recording here at this point and go back to just us. So let me stop it here. Although I never can seem to find, right here.